As we step into a new year filled with hopes and aspirations, let's take a moment to look at Sri Lanka's economic journey in 2024, a year marked by stabilization and cautious recovery after the financial crisis of 2022. Sri Lanka made a significant progress in the fronts of external debt restructuring as well as on the extended fund facility with IMF. Country has achieved 96% success rate on restructuring of 12.5 billion international sovereign bonds, leading to improved credit ratings from Moody and Fitch. Agreements were also secured with the Official Credit Committee and the Exim Bank of China, covering $10 billion. IMF Extended Fund Facility supports recovery, $1 billion disbursed so far, and the next disbursement is expected in early 2025. Sri Lanka faced 5 consecutive quarters of economic contraction until the third quarter of 2023. The real GDP expanded by 5% in the last year, marking the highest annual growth since 2017, bolstered by the expansion of the industry and service sectors, especially the growth in the construction sector. Inflation measured by CCPI was recorded at negative 1.7% in December 2024, marking the fourth consecutive month of negative inflation. While early inflation spikes were attributed to VAT adjustments, they were subsequently mitigated by lower energy prices and a strong currency throughout the year. Despite negative inflation, personal finances remain strained due to limited reductions in prices of essentials, unchanged debt obligations, stagnant wages, and increased tax burden. In line with these inflation trends, Central Bank of Sri Lanka revised policy rates downward 3 times during the year 2024, with the recent introduction of a single policy rate of 8%, known as the overnight policy rate. The reduction in interest rates will significantly lower the borrowing costs for both individuals and institutions, leading to increased consumption and investments, which will in turn drive the higher GDP growth. External buffers have been built, supported by improved foreign exchange inflows amidst the flexible exchange rate regime. By the end of 2024, the country's foreign exchange reserves reached approximately $6.1 billion, surpassing the IMF projection of $5.6 billion. External buffers were also supported by the tourism earnings of $2.8 billion during the first 11 months of 2024 and the worker remittances totaling to $5.9 billion for the same period. These factors also led to a current account surplus of $1.4 billion for the first 9 months of 2024. As a result of the above inflow, dollar LKR exchange rate has appreciated by 10.1% for the year 2024 from 325 to 292.50 levels. The fiscal sector also showed a significant improvement. Tax revenue reached all-time high in 2024, with the Inland Revenue Department collecting 1.9 trillion rupees, a 25% jump from the previous year. Further, Sri Lanka Customs achieved its highest ever revenue collection under the restrictions on certain imports, recording an income of 1.5 trillion rupees. Further, Excise Department has also collected 227 billion rupees for the year 2024. Up to October, recurrent expenditure increased only by 7%, totaling to 3.7 trillion rupees. The interest cost accounts for about 51% of the current expenditure, recording approximately 1.8 trillion rupees for the period. Sri Lanka budget deficit narrowed to approximately 1 trillion rupees in the first 10 months of 2024 compared to deficit of 1.5 trillion rupees during the same period last year. The primary balance showed a surplus of 830 billion rupees, or 2.6% of GDP, significantly exceeding the IMF's target of 1% for the year 2024. Keep watching this space as we will return with the part 2 of this broadcast soon.